Morning everybody, and welcome to the 14th of March and to another recording of Swing Education and a 4 Majors Analysis update, starting with Euro against US dollar. So have a look at the daily time frame for the Euro. You'll see that on Friday we saw price literally take back all of what it took the previous day on that shorting opportunity. And by doing so, the pair found support at a 20 period moving average. Pair traded below moving average on both days, but managed to close higher on both days. See that? Okay, so the excuse me, the close around the 137.80 mark has seen price bounce to the upside, just below the 138.00. Yeah. You'll notice that there are a number of days in the past we also saw a bit of hesitation, so price has now bounced favorably to the upside. And now we could obviously see 1400 being re-attempted soon, and we've seen the Asian market trading session, price rallied slightly higher but fell back. Okay, as the Asian market has continued throughout the evening, and what we're seeing now is price pretty much moving sideways. So if I can just get this right, support around the 13.9200 mark, and the Asian market high. See the squeeze pattern taking place. So that's on a 30-minute chart. CTC's in our favor, 50-minute CTC's in our favor, hourly CTC's in our favor, 4-hour CTC's in our favor, and daily CTC's in our favor. What needs to happen now is obviously on a 15-minute or a 5-minute we need to see the break of the Asian market high, which in this case was here just above the 13.95 mark for further progression to the upside. The same goes for the downside. Price needs to break lower than 13.92 to see further extensions to the downside. Be aware that the 50 period moving average is also in play at that stage. Ideally we want to be trading higher than 13.98 to see a very bullish signal that we can see further extensions to the upside. Okay. At the moment now we're just seeing consolidation in a band, and you'll notice that these swings are slightly lower. We've had a retest just recently. Ideally we want to break above 13.9550 to see further extensions to the upside. Otherwise what we're going to do is see a fake out. It's going to fake us into the market and pull us straight back again. So there are opportunity to make pips in this, but the volatility dictates that we'd rather see a break of that band. Otherwise we could just be faked into the market only for it to go short again. CTC is in our favor, so ideally we should be looking for further progression upside wise, but if we see a break lower than this holding station here at 13.9200, expect possibly a break lower to around about the 13.88 mark. We've had prior resistance support and the 200 period moving average and the 50 come into play at that level. Okay. In terms of pullback wise, you're looking roughly around the 50 period moving average, in between the 50 and the 38.2. So it would be a 50% retracement of that figure. Okay, so that's the Euro against US dollar. I'll be back next with the sterling against US dollar. Okay, next is the sterling against US dollar on the chart. Just looking at the daily time frame to see what's been happening. Okay, we've seen price fall quite dramatically for this pair over the last week or so. A lot of people were able to capitalize on that. We saw some highs here, we saw a breakdown to the low side, a pullback, and the further extensions to around the 100% fib retracement area. We saw price actually reach the 1600 mark, which was prior resistance and support in the past at this level, and then we've seen price revert back to the upside during the latter part of Friday afternoon's US session trading. And then during the Asian market open last night, we're seeing a kind of a very flat trading range. What it's done is this swing low that we saw on Thursday has now shown a new trend direction. The 50 period moving averages was in play at some stage. This long candle here, very important in terms of looking what price needs to do first thing this morning or going into the US session. Primarily that now caused a swing, and you're seeing Asian market still trading higher than this low. So if I put that under here, because you can see this close and this open and close is still in that area. And if I extend that to this, you need to know that as long as price is trading above this line here on a daily at 1606, then there's a good opportunity we might see a bounce to the upside. So trading above 1606 and a close higher than the candle previous high at 16086 would definitely see an opportunity for price to break and bounce to the upside. It might very likely test 16011 price support, or even go as far as the 20 period moving average. But we're going to, if I just put that on a smaller time frame like an hourly or something like that, 1606, is this area now. Notice however that there's a pause at 1609 and the 50 period moving average is there in play. We don't want to be, and you'll notice that the price is to the downside. Okay, be aware of this, guys. Very, very important. Okay, we have now broken through lower, and now we punched higher than a previous resistance level or support level. Now we're trading this range. For this to be still considered bullish, it needs to stay above this area at 1606. Failure to do so would see price obviously revert to the downside. Why? Because the CTC is governed red and we're trading below a extended downtrend. There we go. It needs to break that downtrend in order to be considered bullish, and by doing that it'll be trading well above the 20 and the 50 period moving average, and then we need to see it trading well above 1615 in this case. Very strong support area in the past. So it's going to do a lot of work to get back up here again. Okay, remember that. On this time frame you can see we had swing highs, so trend direction is now in play as we speak for this time frame. This is an hourly chart, guys. Failure to break above 1609 going to the latter parts today would see the 50 period moving average just push this down because we're in a negative. We might see it even consolidate in this band. So pair needs to do quite a lot. 30-minute chart, you can see there 1606 is what I told you. The pair needs to be trading higher and staying higher during the course of the intraday trading range. And there's our intermediate uptrend, because you can see as prices moved to the upside since Friday afternoon, we've seen higher swings created, and by doing so it's now trading above a previous breakout area. And if we can stay above this breakout area, then we can find support like it's done in the past, and we could see a further push to the upside. Okay, support, 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 breakout, resistance, breakout, support, and now back to the upside. See that? And there's another resistance level around about the 1608 mark for this time frame. Okay, so needs to stay higher, trading higher as we go into the US session. Otherwise we could see the 50 period moving average pushing this lower, and because we've had a break lower and the trend is down in our favor, we should be looking for potential continuations to the downside. See the trend is lower. We've had swing lows for a number of days now, so the closer we get to this all-time, well, to the trend line, there's a good possibility that we might just be pushed down because the 20 period moving average is still, 200 period moving average is still there above us. Okay. Trend direction is always governed by the moving averages. If moving average is all above price action, then we know we're in a negative trend. If moving averages is below price action, then we know we're in an uptrend. Remember that. We've only got, on a small time frame, things are looking good because the moving averages, the two short-term moving averages are below price, which means the supporting price is moving upside. However, the 200 period moving average or the institutional moving average is still governing this negative. We know that because we have been in a negative trend on the sterling on a daily period. So going into intraday, we should still look for potential downside movement because of that. Okay, so that's sterling is US dollar. And as we speak, on our 15 and 5 minute, we can see price breaking lower. Okay, so we know straight away that price sterling is unable to break higher. If you look at it, 200 period moving above, all the moving averages above prices moved, unable to break higher. And because we're on a negative trend, i.e. swings are lower, you should still only look for negative movement. If this candle still stays low on a 5 and 15 minute, then look for definite possible movement further downside because of this trend now governing this pair to the downside. Okay, next up is US dollar against Swiss franc. Okay, the next pair we're looking at excuse me, is the US dollar against the Swiss franc. Okay, it's going to pull up the daily time frame, and you'll notice that this pair, since breaking 935, which happened to be a very strong support level in the past, we found the pair battling to break higher, so consolidating as prices pulled back, and then today we've seen price break lower than that pullback. So we can see that momentum is possibly back to the downside again for this pair. TTC is very negative on a daily time frame, so expect further downside movements. You look at an hourly, for example, price has failed to break above this level here on numerous occasions, which happens to be the 200 period moving average. Let me just draw a line there because my line drawing is absolutely shocking. You can see after falling down, prices failed to break higher again. The moving averages are all above it, so very negative sign for this time frame. The hourly price needs to be trading higher than that in order to see further upside movements. Failure to do so, it would see further extensions to the downside because of that. If we move to a 30 minute, for example, you can see movement is still failing. Price support is now resistance, and you can see price falling now because of that. Okay, so we should be looking for nothing more than further extension to the downside. 5 minutes swings are lower. Okay, here we go. Price is broken out for a holding pattern. That was a previous support area. Price is reverting back now. If it finds resistance at this level here, thereabouts, then we could see further. This is primarily a breakout, pullback, continuation to the downside. Okay, so CTC looking for further shorting opportunities, primarily because price is on a 4 hour. You look at it, the upswings being tested as we speak. Okay, it needs to be trading lower. Just keep that in mind. We do have a swing here, primarily because you've had 1, 2, 3, 4, 12 hours worth of support in this area here. Failure to break lower than 927. You can see this is just a squeeze pattern and a break to the upside. However, you'll notice that this and this formed a swing lower. Price needs to be trading higher than this breakout pattern here. there, and if it failed to do so, we would see price literally be break to the upside. So we are in a consolidation period as we speak. Price is testing an uptrend on a 4-hour time frame, but has failed to take off like it did here prior to the upside, and because of that it's actually just traded now in a box type pattern on this time frame. So what is that telling you? That the momentum or market sentiment isn't all that in favor of upside movement. That's what it looks like. And if it fails to break higher going into the US session this afternoon, or fails to break higher in this area here at 930, you'd see price revert to the downside. Remember, this trend line is in play. A 4-hour time frame. Be aware of that. Okay, there we go. If I move it out, you can see the swings are higher on a 4-hour time frame ever since the 2nd of March. Okay, so what we're seeing on a smaller time frame could be these levels here as the low. They can go failure to break below 9265, would see a bounce from what is on the daily time frame on the 4-hour as the uptrend, and if it stays above that area here at 927, then we could see further extensions, a possible bounce to the upside. 927, see that, guys? We're in this range. These are just the wicks to the upside, so it can't break and close lower than 9265 or 926, because then it's showing us that the market sentiment is down, and then we've broken the major trend on a 4-hour, which is up, and we can see further extensions to the downside because of that. Hey guys, that's it. I'll be back next with Japanese against US. The US dollar against Japanese yen. Okay, we've known that the Japanese nation has been rocked by a huge earthquake, which has triggered some huge tsunamis, and we've seen a lot of devastation, and we've seen a nation brought to its knees by the force of nature in as many days. It's very, very sad to see. We're going through a lot of turmoil at the moment. I think the Japanese president mentioned that this is the worst crisis they've had since World War II, and nothing can blame them. And the strange thing is, not another human did this to another human. It was actually a force of nature. Can you believe it? And it just reiterates the fact that nature still dictates what happens on this planet, and we are just mere mortals amongst this higher power. But what it's done though is it's left this country in a lot of turmoil, and we saw the first part of this morning, we saw some the US dollar losing ground, which meant the Japanese yen was getting strength. The Japanese government has mentioned that they're going to be pumping in roughly about 15 trillion yen, or 113 billion pounds to you and I, in order to prop up the Japanese market in this time of crisis. Figures showing that total coastal villages and towns and cities have been wiped off. You will also be aware that Japan has the 3rd largest number of nuclear reactors for such a small nation, and during the tsunami and the earthquake there were 2 reactors in particular. One was badly damaged, and we saw pictures of it, of the actual shell, the outer shell exploding. This is apparently due to do with pressure, but apparently there's also been another explosion at the same plant on a different reactor. Now that's another worry now. Nuclear fallout, radiation levels, etc. This can be another problem for a country that's really facing some serious issues at the moment. So what you're seeing at the moment now on a daily time frame is, you'll notice if I just pull up, that there was a massive down spike. Even looking at a 4-hour chart, crazy down spike as of the open of the the Asian market. At 1 o'clock this morning we saw it fall to the downside. However, as the market has progressed, price has managed to pull it all back again, and what we're seeing now is we've seen a slight resistance level take shape just below 82.25. There's a little box pattern and a support at the same area, so you can see now there's a box formation. There we go, and we're looking at it on a 50-minute chart, so just be aware that the 200 period moving average is also in not too far away. Okay, so be aware of it. If you see a break to the upside, don't be fooled, because we could very well see price just move straight into the 82.50 mark, which would be a strong resistance level, and pull the price back again. So price has to do quite a lot. If price can still stay above this area here, then obviously what we're seeing on a daily time frame is this uptrend on a daily time frame, the support area actually coming to the rescue. So going into the rest of this week, we need to see price still trading higher than this level here, this uptrend, in particular the 8200 mark. By doing so, we could possibly see price dictating that we could see further extensions. However, if price reverts back to the downside and close lower, then at least prior swing, in this case over here at 81.60, then we could definitely see this trend being broken, and by doing so it's trading below all the moving averages at the same time and broken a very strong support level, and we could see price reverting back to the downside because of that. Okay, this swing, this negative selling we saw on Friday because of the news outbreak of problems in in Japan with the hurricane, the tsunami and earthquake, you could see price just revert back, failure to close higher than the support level. We just see it just tumble back to the downside again, because now this is posted a swing low, and this low is lower than that one, so confirming trend momentum to the downside. And because of this down candle here, it broke the upswing, which was this one. So we saw price revert to the underside of it, find resistance, and it's now trading lower. So are we going to see a squeeze, breakout, pullback, and continuation to the downside? Okay, that's it for today, guys. Excuse my voice. Do have problems with a nasty flu virus. It hasn't done my voice any favors, but hopefully you'll be able to understand a bit of what I said this morning, and hope you have a fantastic trading day. Trade serenely.